So if I'm waiting for a top wick here, chat, I'm looking to see if we can get a top wick within this range. Between 23.61, 23.63 minimum on the 4 candle. So what that means is that like I want to see the 4 candle come up here, create a top wick for the 4 candle opening, and then continue down, right? So once it actually taps like 23.63, 23.61, if there's no bottom wick, there's potential for wick entries. If there is a bottom wick, like if this candle decides to continue pushing down to fill the wick first, and then it flips bullish, there's no wick entries, because then at any given point, this could just been a bottom wick for us to rip up, right? So what you want to see is you want to see us continue push up here for a top wick without breaking these lows, because then if you were to make your way down towards the bottom of the range, you're going to get a fake out. How are you going to get a fake out? Here's how you're going to get a fake out. So right now, this is where price is sitting, right? This is where price opened up at. So just imagine the movement. Came down, came up, boom, right? So price opened up. This is where price is right now. Price is right here right now. Came down first. Came up, or sorry, no. Let me redo that. So price opened up, printed a mini top wick, came down, right? So this is where the low is right now. Came down. So if it were to come up to create a top wick, this is what's going to happen. What do you have here? What do you have here? A range. So if you end up coming down to re-break the current lows here, what's going to happen to the structure is you're doing this. What is this, chat? What is this below here? You have a range coming down the word. That's a fake out, right? So therefore, if that is a top wick that you create and you come back to the ranges, then you can probably look for positions below these levels here, right? Which is a 5 closure or 15 closure below here after a top wick. Plus on top you have a fake out, and you are likely to continue down towards the next 4 lows here, which is here, right? So this is very key to pay attention to right now. If you don't get a top wick and you continue to push below the ranges, it's fine too. We'll adapt to that. We'll look for positions below like 23, 40, oh no, 23, 49 areas, chat. Below 49, I'll say. Let me confirm that, but it should be around those areas. 30-minute candle closure, yeah, below 40, 48. I really disagree, Don, but this time I do. I am from the future, and we're going to see 37. The thing is, though, if you see 77, like I'm not saying I don't see that as well. Like you can definitely tap 77, but you need liquidity for that to happen, right? Like you need liquidity for that to happen. Like these are your ranges right now. You're looking at this right here on the range, so right here off of this, and then you're looking at roughly this. Right, like this is the range you're currently in. So I would assume that for you to come up towards 76, you need to close above here. But even if you do close above here, right, you still don't have enough of a bottom wick liquidity to drive up yet. I would assume that this would be needed if you were to drive up. Right, if you were to close above, like for instance here, and you were to come down for a bottom wick like this, then yeah, that's enough. Right, but the sells that we're taking is with the daily as well today, so that's on our side. Plus, it's with the fact that you haven't grabbed liquidity yet, right? So I have a level here that we're looking to like take advantage of, 5 to 50 zones. That's still the advantage point. But yeah, like I would see 7.72 only if you were to grab liquidity first. So once that taps, once we're out of the trade, sure, that is a possibility. And then worst case, we'll look for more buys later on too, right? So if we get out of this trade down at like 50. If it continues driving down towards 48 and towards the rest of the daily, then it just runs down, right? But for some reason, it flips bullish afterwards. We'll look for more buys of 62 going up. But I wouldn't think that you would have enough liquidity to drive up. I would assume that it'll at least be like these areas to the left here. 50 to 48. Just because that's what the daily shows, right? The daily candle as well. There's a daily level right there at 23.50. And you're very flip bearish after a top wick. So I would assume that this is liquidity for you to drive down towards their minimum. But let's see what happens here, chat. Obviously, we're in drawdown right now, so we can only adapt to what price is showing us, right? So far, if you flip bullish on the 30 again, you flip bullish on the 5. Yeah, you're gonna close bullish on the 5 in a couple of seconds, or likely. But there's no like managing risk for me until like the 1 hour closes minimum. So if the 1 hour decides to close above these ranges like this, I'll manage risk. Above like 23.63, 30-minute counts coming up for the wick fill, but it did come down for a bottom wick first, chat. Again, like you wanted to see the top wick first, right? Like it was just because then if I mean this wasn't that crazy of a bottom wick, but still like structure being printed, right? I mean, you had 3 minutes for a 5, so maybe you can still fill the wick and flip in the 5, but you did want to see the top wick first. Because look what happened here, right? This is what happened. You opened up. Oh, that's a huge wick. You opened up. Came up. Came back down. What is this? Resistance. Support. This is the range. This candle was the range right now. That was the bottom wick, right? So if you were to come up, which is where you are right now, and actually close above there, and you re-break the highs, then you can say, you know what, this might be a higher low on this candle, right? Which is what that is. So like seeing a top wick first would have been like this. Would have been like open up, top wick, bounce back, and then continue down, right? Because then you can say our highs, our lower highs being printed. But you can argue and say this wasn't enough of a bottom wick yet. But as more time passes, as it gets closer to the 1 hour closure, just pay attention. Still, until you actually close above on a daily, then that's a different story. But I think even if you close above on a day today, chat, like let's say you close above this range here on the daily, tomorrow's daily candle will still need a bottom wick to drive up. Like you're still gonna need to see something like this being formed before ripping up tomorrow, even if you were to drive up tomorrow. Because look, your next range is what? You're bullish towards 295 next, right? So if you actually close above the range, that's where you have clean traffic till. For price to push up towards these areas here, you're gonna need to see a bottom wick tomorrow. So that's why I'm looking for sells, not because like that's the bias, because that's the next step of the process, right? That must print in order for price to drive up. And if price drives down, and price drives down, flips on a daily, then we'll have an answer for that too, right? So in our case, it's a win-win situation. Is it gonna play out though? I mean, we'll see, right? If the 1 hour closes above, we'll manage risk. If it stops, then we obviously won't play out. But that's the idea. That was the idea from the morning that I had. I'm not saying it's not bullish. It's just that for it to be bullish and continue driving, you prefer like to see 50 get tapped. Thanks for explaining what entry on the flip is not the wick. Appreciate your work, man. Because this is like catching a falling knife with the opposite direction, right? It's just bullish here. This 1 hour candle closed bullish, right? So you are expected to drive up, but it closed respecting, and that's why that respecting is very key, because these levels have been respected all morning. If you flip bearish, it would just be like any of these other candles here that just flip bearish, right? So it's a sell stop, because once you flip, you know that it will have range to come down to like 23.59, 23.60. Since it closed bullish here, it can just continue to pop, right? With the 4 candle highs, it can just continue to re-break the highs, just continue to pop. So there's no guarantee of us rejecting here, because these are bullish candles going against it. But if it were to come up, create a top wick, flip bearish, then that is your indication, because then it'll be a bearish candle afterwards, right? It'll look like this. And if it looks like this, then it can likely come down towards bottom of the range like that. But this is like catching a falling knife. Like if I were to invert charts here, no, right?